All right, so let's just take a look at the market, and I'm just going to go over some turning points and all of that. So I wanted to start off with yesterday's action. All right. Now this is a tape reading chart. It's basically point and figure with volume, and then the sum of the volume is in the green prints. So it's just the sum of the volume on the column, and with the individual volumes in the boxes. All right. That's all. And you know, if a market makes a high and all of that, just put rally. And the number above that is basically where the stop should be. All right. So it's pretty. It makes it very easy to manage the trade. After you're in it, you don't have to think too much. Just follow the instruction. Anyway, let's take a look. So the market was rallying, right? And what you'll notice here, what do you notice here? That's 71 print and 97 volume. How big is it? It's bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, about 18, at least 18 columns. So 97 right up here. And look at the size of the box, the column. There's no size. So what happened here, I'm not sure what happened, but okay, so over here, this right here, this heavy volume that's unable to go higher, right? It just broke. So what is this called? This is, I mean, you can call it effort reward, you can call it climactic behavior. Doesn't really matter. Just, it's selling, it's distribution, it's supply. It's very, very, very clear supply. So once that happened here, market broke. So this is an example of effort reward. So all that effort, not a lot of reward. All right, and then what happened was right after that, market broke. And then we're going to see that this base was, I mean, I haven't seen such a clean base for some couple of days. I mean, well over almost 2 weeks. But I mean, it's a very, very clean base. This was reaccumulation. And let's get rid of all this. All right, give me 1 second. Okay, now it looks a little bit cleaner. So what happened was, after it rallied down, you can see it 1, 2, another attempt to rally down. But what told you there's something that's not quite right? And that was this volume right there. Because this distance here is 2 boxes and it's 9. This distance is 2 boxes and 52. So something's going on here. I was thinking it's going to break down further because there's just maybe there's more supply coming in. And then it broke, but the reversal here is very telling when it takes out that volume high. So that right there, you know, if you're going to mark something, you want to mark that because that's one high. Okay, it's the resistance. It means that I found demand at the attempt of this low, which you may call a spring, and went up. You had about 20,000, and then 7 and 7, so about 34,000. Then it starts going sideways, 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 and there's your breakout. That right there is a signal to go long. That right there says go long. And after that, went up, up, up. This selling came. How did you know this selling was going to come? Well advanced. Not only the red bars, but the key was the folks that didn't get in on the breakdown here, they have their orders here to go short. Why? They're selling the test. They want to sell the test of this area that broke, the first test. So as soon as it tags this 20, right, you can see the volumes increase. Why? Because there's sellers here. And they get their piece of the pie right there. When it comes back down, the buyers again, who are protecting this base, this accumulation, they start buying, and they start buying with authority. You can see the volumes here increase significantly. The volume on this down move was 49. The volume on the up move is 67. I mean, that's significantly more than the breakdown. So clearly, you cannot have this type of behavior in a downtrend. In a downtrend, just like in an uptrend, the rallies have to have more volume than the pullbacks. That is normal behavior. You cannot have the rally with 49 volume and the pullback with 67 volume. It just doesn't work that way. And that's something you count on. Like over here, the rally is 26, the pullback is 11, 19, right? I mean, you just see this. We just examine this trend here. This rally is 96. This rally is, whatever, up bar is 101. Pullbacks are 15. You know, so rally 10, pullback 1. Rally 26, pullback 11. This one increases on significant volume, but that's because when you have a rally and you have a pullback, and it does have more volume, look at it to see how much distance. If the distance does not validate the amount of volume, it's because there's effort. And that effort is because of that brick right there, the 23, that's demand coming in. So, I mean, usually the general case is the rally will have more than the volume, more volume than the pullback. The times when the pullback has more volume, look at the distance. If the distance is not that big, look to see if there's demand coming in, because it's a case of effort reward. Again, 49, 42, 46, pullback 39. That's the normal case. And then eventually you just have this rally, which has just way too much volume, has 89, much more than all the others. And down she goes, right? So this is a good case. This is a good study for effort reward right here. You can see very clearly the print here. The print here is 71. It's the biggest print there is. The volume is 97, which is the biggest volume. I don't know how many bars. So this is a good thing to study, because it's going to happen again and again. It always does. And then over here, you want to make sure you're taking a look at the volumes. Okay, 52. It picked up, did a spring but rejected, and then finally made the higher high, making this trapped. And when a move goes down like this, 49, and then this comes up on 67, and after that 181, there's no question that, and it takes out the high, there's no question it's going higher. And that's what it does. So we'll continue to look to see if there's any effort or climatic behavior. Here, this is this right here, I thought it was going to break. Right there. They picked it up, but if the bears had a chance here, because you have 153. That's higher than every other one except for the breakout. So you have breakout type volume over here, and there's just too much volume at the top right here, 117. That's not normal. That's a massive print. Alright, but then what happened was, as it was going down, it got reaccumulated, and then once again they broke out. Right there. And remember, what the breakouts are doing is it's clearing resistance. When markets do that, boom, like they clear resistance. They absorb or break out or whatever the highs. And they see, that's what's going on. Bang, clear resistance, clear resistance. until finally you get up here where you have 109 and then 72 and then this big selling right here, 141, which is the biggest in 37 bars. So that is your selling, but that's really to be expected because it's the end of day. So all these traders are gonna, they're gonna take their profits. So what do you glean from this? One, clean base. Right here, nice breakout. You saw the spring, the volume came in, was trapped after this high. It got tested. They exit their shorts, helping add the pressure to the upside. Continues. Here, possibly, if it broke down, but it didn't break down. Why? No trap. They're not trapped. It needs to break this area. And then end of day selling. Alright, so I mean, just wait till tomorrow, you'll get more trades here. There's no real turn here. There was one potential opportunity for a turn here, but it didn't materialize. Other than that, it just kept on breaking high. It's not normal. Typically, there'll be springs and all of that. You really don't see that here. It's just after this, it just kept on going. A little pullback here, but just kept on going. This is not normal behavior. So wait for tomorrow where there should be a pullback. And that's all, folks. Take care. Bye.